A small move in the right direction for inflation. This week's fastest 4 minutes in finance. Hello, I'm Scott Inman. Thanks for joining us. May inflation numbers were released this week, and it was good news, but I always love reading the hyped up headlines. Here's a sampling. Inflation surprise. Prices unchanged in May, defying expectations. CPI inflation shock sends stocks soaring, reviving Fed rate cut bets. Now, the reality is that inflation was flat month to month, meaning the Consumer Price Index, which is a large measure of overall U.S. prices, did not rise from April to May. Year over year, CPI was up 3.3%. Now, the surprise part of this was that economists expected a 3.4% increase over the past 12 months and 0.1% month over month. So not really a shock. Stocks did, in fact, soar immediately after the numbers were released. The S&P 500 index popped over 1%, the NASDAQ rose nearly 2%, and the Russell 2000 was up about 2.8%. 10-year bond yields dipped by nearly 3%. So the cause for the rally is, of course, the bet that the better the inflation data, the more likely it is that the Federal Reserve will begin to cut interest rates later this year. If you've listened to or watched the Fastest Four for long, you know we like to offer perspective beyond those headlines, though. So here's the balance you need on inflation. The May numbers are good for the economy, but it's important to remember the cumulative effects of rising prices on you. Take a look at this chart from Rocket Mortgage using U.S. Bureau of Labor Statistics. You see 9 categories there with the overall price change in each since 2020. Auto insurance is up 46%, gas up 34%, energy overall registering a 34% gain as well. Used cars and trucks climbed 29%. Restaurant prices jumping 25%. Shelter is up 23%. And overall prices are up 21%. This illustrates the point that a slowdown in the inflation rate does not mean prices are going down, and we should never expect them to. Ronald Reagan once said that inflation is as violent as a mugger, as frightening as an armed robber, and as deadly as a hitman. So how do you battle that? In your working years, you have to grow your income. And that's happening nationally. Here's a chart from Statista that shows the wage growth rate in blue and the inflation rate in black. You can see prices were going up quicker than workers were getting raises from May 2021 through February of 2023. But that changes and has changed ever since. Wages are now outpacing inflation, which would suggest the worker who is getting a raise is able to handle most of the price increases. Now, the second thing you have to do to battle inflation is to save money and invest in asset classes that have historically outpaced the rate of inflation. Those asset classes are stocks and real estate. You need this during your working years, and you need to continue to do it on some level in retirement. Inflation may be a mugger, armed robber, or a hitman, but you do have weapons to battle it. Thanks for watching. Want to become smarter financially in 4 minutes or less? Sign up at fastest4.com to get insights and updates like this delivered to your inbox weekly.